Bitcoin explodes to $109,000. What's fueling this surge and what's next? Experts weigh in on Bitcoin, Ethereum, Solana, and more. Plus, the power struggle for control over Bitcoin and a potential altcoin season in 2025. Don't miss out. In the latest video from Altcoin Daily, Bitcoin's price surged to $18,000 after Bank of America called it a major disruptor. On-chain metrics show long-term holders aren't selling, and Bitcoin ETFs have seen over $9 billion in inflows over the past 2 months. An analyst predicts trillions will flow into Bitcoin ETFs as major firms like JP Morgan and Merrill Lynch get involved. Cardano plans to use its $1.2 billion treasury to buy Bitcoin and stablecoins, potentially creating crypto's first sovereign wealth fund. Ethereum whales bought $2.5 billion of ETH on Sunday, with price predictions reaching $4,000 short-term and $10,000 long-term. Solana and XRP are also showing growth, with new spot Solana ETFs launching and XRP addresses surging. The Bank of America acknowledging Bitcoin as a major disruptor is a significant shift in the traditional financial world's perception of cryptocurrency. While past skepticism is understandable, the growing institutional interest and substantial inflows into Bitcoin ETFs signal increasing acceptance of Bitcoin as a legitimate asset class. Cardano's move to buy Bitcoin with its treasury is an interesting development that could potentially stabilize the ecosystem and boost ADA's value. It's also fascinating to see the renewed interest in Ethereum, especially with whale activity at levels not seen since 2018. The market overall seems to be experiencing a renewed sense of optimism, and it will be interesting to see how these trends develop in the coming months. In the latest video from Crypto Rover, Bitcoin's next price move is discussed, pointing to a large amount of liquidity above current price levels, historically leading to upward movement. The video analyzes Bitcoin's current consolidation phase between $18,000 and $14,000, with the $16,000 mark being a critical level. The host believes Bitcoin is likely to move towards the liquidity around $110,000. The video also mentions Michael Saylor's recent purchase of over 10,000 Bitcoins, a $400 million Bitcoin purchase through a spot ETF, and an upcoming Senate hearing on a stablecoin bill, all potentially positive factors for the crypto market. The video also discusses Ethereum's similar consolidation and predicts a potential breakout to $4,000. A 10% deposit bonus on Bitcoin C exchange is also mentioned. I find the correlation between Bitcoin's price and global liquidity interesting, although the connection isn't always straightforward. While increased liquidity could potentially drive up asset prices, other factors like regulatory changes, investor sentiment, and macroeconomic conditions also play a significant role. The mention of Michael Saylor's large Bitcoin purchase is noteworthy, as his actions are often closely watched by the crypto community. However, it's important to remember that past performance doesn't guarantee future results, and even prominent investors can make incorrect predictions. In the latest video from Lark Davis, he discusses why he believes Solana, SOL, is a strong investment opportunity. He points out the upcoming Fire Dancer upgrade, which could boost Solana's transaction speed to 1 million per second. He also notes the 7 ETF applications filed with the SEC, including ones from Fidelity and Grayscale, suggesting significant institutional interest. Davis also highlights the growing number of companies adding SOL to their treasuries, like Sol Global Investments and DeFi Technologies, mirroring the Bitcoin treasury strategy. He compares Solana's market cap to Ethereum's, arguing that Solana is undervalued, especially given its superior transaction speed and lower fees. He mentions that Solana has seen more new developers than Ethereum recently. He concludes that given the upcoming ETF approvals, corporate treasury adoptions, and the Fire Dancer upgrade, Solana's price is likely to increase significantly. While Davis's enthusiasm for Solana is understandable, it's important to view his predictions with caution. The crypto market is notoriously volatile, and while technological upgrades and ETF filings are positive signs, they don't guarantee price appreciation. Recent news articles suggest that regulatory uncertainty surrounding crypto ETFs still exists, meaning approval isn't a sure thing. Also, while Solana's speed is impressive, issues with network stability in the past raise concerns. It's always wise to do your own thorough research and consider the risks involved before investing. In the latest video from Ben Cowan, he looks at Bitcoin's running return on investment, ROI, over various timeframes. He compares this cycle's ROI to previous cycles, noting similarities to both the 2017 and 2019-20 cycles. Cowan points out that Bitcoin's 4-year ROI has always been positive, historically, although he acknowledges this might not always be the case in the future. He also observes that when the 180-day ROI dips below 1, it has often presented good buying opportunities in the past. Cowan's analysis of Bitcoin's historical ROI offers a thought-provoking perspective for investors. While past performance isn't indicative of future results, the 4-year ROI data is definitely interesting. The comparison to previous market cycles is also helpful in understanding the current market dynamics. It's worth noting that external factors like regulatory changes or macroeconomic shifts could impact Bitcoin's future ROI, which adds another layer to the analysis. In the latest video from Coin Bureau, we learn about the ongoing struggle for control over Bitcoin. Large asset managers such as BlackRock are trying to gain influence through investments in mining companies, funding developers, and accumulating large amounts of Bitcoin. Their spot Bitcoin ETFs even include clauses allowing them to choose which Bitcoin fork to support in the event of a fork, like one caused by a potential quantum computing attack. However, crypto entities like Tether are pushing back. Tether's CEO revealed they're the largest Bitcoin miner and are also funding Bitcoin development, aiming to maintain Bitcoin's decentralized nature. Both Tether and MicroStrategy are accumulating large amounts of Bitcoin. The video suggests this tug-of-war between traditional finance and crypto could actually benefit Bitcoin, leading to a more robust network and higher Bitcoin price, as long as neither side gains complete control. The video also touches on Bitmain's role, the largest manufacturer of Bitcoin mining machines, and the potential risks if it goes public again. It ends by pondering the implications of this power struggle and what could happen if one side gains a decisive advantage. This power struggle over Bitcoin reminds me of the early days of the internet. Initially, it was decentralized and open, but over time, large corporations gained significant influence. While this centralization brought some benefits like improved infrastructure and wider access, it also led to concerns about censorship and control. It will be interesting to see if Bitcoin follows a similar path or if the crypto community can maintain its decentralized ethos. I'm not worried, though, as it seems like the opposite forces keeping each other in check. In the latest video from Crypto's Russ, Bitcoin saw a price surge to $109,000 before settling around $107,000. This volatility is linked to global events like the Middle East conflict and the potential manipulation by whales liquidating positions. Despite this, the host remains bullish, citing upcoming events as potential catalysts. The FOMC meeting on Wednesday could accelerate a Fed rate cut, while tomorrow's Senate vote on the Genius Act could positively impact DeFi projects and stablecoins if passed. The host points out Bitcoin's low 3% adoption rate, comparing its trajectory to the early stages of the internet, and notes that exchange reserves are dwindling. The video concludes with the host highlighting Bitcoin's strength and the potential for future price appreciation. It's interesting to see how geopolitical events can influence Bitcoin's price, even with its decentralized nature. The mention of the Genius Act and its potential impact on stablecoins and DeFi is particularly noteworthy. This regulatory development could be a turning point for the crypto space, making it more accessible to institutional investors and fostering further adoption. While the host's optimism is understandable given Bitcoin's historical performance, it's important to remember that the crypto market remains highly volatile and susceptible to external factors. It will be interesting to see how these upcoming events play out and their ultimate effect on Bitcoin's price in both the short and long term. In the latest video from Crypto Casey, Bitcoin stands strong at $104,000 to $105,000 amidst global uncertainty. She discusses the potential for an altcoin season by the end of summer 2025, triggered by Federal Reserve rate cuts and economic stimulus. Coinbase's new Bitcoin Rewards credit card, offering 4% back, signals growing mainstream adoption, alongside the integration of Bitcoin into retirement accounts and Trump's push for a stablecoin bill by August. Casey emphasizes the importance of accumulating Bitcoin long-term. She highlights a potential explosion of financial competition driven by banks offering digital dollars with better incentives like higher interest rates and instant global payments. Several companies like MasterCard, Visa, Stripe, and PayPal are embracing stablecoins, further solidifying their integration into the financial system. Shopify's recent partnership with Coinbase also allows millions of merchants to accept crypto payments. While the video paints a rosy picture of crypto's future, the predicted altcoin season hinges on a lot of ifs. The Federal Reserve's actions are difficult to predict with certainty, and the regulatory landscape is still evolving. While institutional adoption of stablecoins is encouraging, widespread retail adoption faces hurdles like user-friendliness and understanding. The rapid pace of change in the crypto world makes it vital to stay informed and evaluate predictions critically. It's fascinating to see how far Bitcoin has come since 2017, and the increasing integration into mainstream finance is a major development. The competition among financial institutions to offer better digital dollar solutions could indeed be transformative, potentially offering consumers more choices and control over their finances.